You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The futures markets can be downright scary. Limit up, limit down. What the heck is RBOB anyway? Are they going to dump a truckload of soybeans on your front lawn if you click the wrong button? Come to think of it, maybe you should just stick to your comfort zone. Or you can break out of it with the Futures Rundown. The Futures Rundown is here to help you make sense of these scary markets. We'll analyze all the top futures trading activity, explore the ins and outs of your favorite products, explain exactly how futures work, and hear from leading experts in the futures markets. We'll even tackle all of your wildest futures trading questions. If it involves futures, then you'll hear about it on the Futures Rundown. And now, it's time to break into the futures markets. It's time for the Futures Rundown. Have you ever looked at a futures product and said, "What the heck is that?" Let's find out together. It's time to get the contract specs.
All right, Dan, this is kind of a combo contract specs and also listener question because it was inspired by this question. This question came in from Kamaru. He wants to know, what's the deal with uranium? He's doing a Seinfeld skit, Dan. What's the deal with uranium? Is it a listed product? Where can I trade it? I don't see it at CME. So a lot to unpack there. Let me just start with that last bit first. He says he doesn't see it at CME. And I guess I could see why you would say that, because as of right now, they are not disseminating a live price for their uranium U308, aka the yellow cake futures. I was doing some digging, and it's hard to find any volume on this product going back months now. They are not disseminating a live price. There are still some contracts open. There is still about 150 contracts open. So I kind of wonder, Dan, I did some digging before the show as well. I haven't seen any official announcement that they have delisted this product, but it seems to be, for all intents and purposes, like it has been delisted. There is no volume, there is no new OI, and there's no contract info being disseminated. So what are your thoughts there? He says he can't see it at CME. Let's start there. What are your thoughts on the CME uranium futures, Dan?
Well, I think you summed it up very well. There's just no volume. And if you think about uranium, who would be interested in trading it? Well, people who are just looking for volatility. And you would think this could be a market that has volatility, and it could be interesting from a trading point of view, strictly as a trading product. All right. And then do you have industrial? Do you have the cash market participating? What you need to see for a contract like this to survive is you need hedgers. You need people in there that are trying to protect themselves from price risk. And if nobody's hedging it, if nobody's using that element or that product to hedge, very difficult to be successful. It also means that if you get into it, can you get out of it? And right now, no one's leading the the line to want to participate in this market. We don't see industrial production. Industrial participation, which is critical. And as long as that's absent, this product will not take off. They're just not participating. And delisting it, Mark, you're probably right. It's a candidate for that type of delisting, but I don't know. My personal feeling would be leave it alone for a while. I totally agree. There's nothing there. You don't want to trade it. It is a big adios market in that regard.
Yeah, you think if ever there was a time where uranium might be hot, might be a little bit of interest, it might be now. And yet, for whatever reason, this contract can't really find its way. It does give me pause, Dan, that they're not even disseminating a live bid and offer for this thing. So even if you wanted to trade it, it'd be a trade by appointment type of thing at this point right now. I guess just to finish up, because it is a contract specs, if you are intrigued, listeners, this contract, such as it is at CME for as long as it lasts, was for 250 pounds of uranium. It is financially settled, so you don't worry. You're not going to get a truckload of uranium, Dan, dumped on your lawn at 2 a.m., so you don't have to worry. Don't have to worry about that. Again, no volume going up. The minimum tick size was a nickel per pound, so you're talking $12.50 in terms of price change per one lot of the futures that you're doing out there with every tick. Such as there have been no ticks and there have been no prints, and there's only about 150 contracts left open out there. So read into that what you will. Right now, uranium not exactly lighting the world on fire. So Dan, that said, for, Kamaru and anyone else who's out there who's intrigued about potentially trading uranium, what would be your suggestions for them, sir?
Well, the only environment, excuse me, that I'm aware of that uranium does, in quotes, trade would be in the derivative side in terms of ETFs. But the volume that you'll see in that area, my concern is you can get in, but can you get out? I guess for me, Mark, I don't want to take on a market challenge. In other words, I don't want to have to think about when I get in, can I get out? There's too many markets out there that are volatile and that have volume. And those are two ingredients that make it attractive for me to look at. And uranium, unfortunately, I like the idea of it. I don't think it fits the bill in terms of liquidity.
It is not the most liquid of beasts. You mentioned the ETFs, Dan. That is definitely one way you could go, listeners. There are a variety of ETFs that at least purport to trade in and track uranium to some degree. Again, depends on what you're looking at. Some of the big ones out there, such as we have the Van Eck Uranium and Nuclear ETF, ticker symbol NLR. It was trading around 108 when we last ran this. Again, this is a uranium and nuclear, so you're kind of getting a bit of a mixed bag. It's not going to be a one-to-one uranium tracking ETF. The same thing with the North Shore Global Uranium Mining ETF, Structure Objective Holdings. Say that 5 times fast. Ticker symbol URNM. So they're definitely getting in on the uranium marketing side. This one is going to track the performance of their global uranium mining index. So if you wanted an index of uranium miners, this could be one of them. It holds 35 stocks of different uranium mining companies. Again, up to you what the exposure is and how good the tracking is. How about the Global X Uranium ETF, ticker symbol URA? That's a newer one launched back in February of 2022. Again, this is going to track uranium and the nuclear components total return index. So up to you to dig into what these indexes are and if they're giving you the exposure that you want. And again, if you want something a little bit crazier, a little bit levered, then how about the Direxium Daily Uranium Bull 2X shares. This is URAA. So now you're getting even wilder, Dan. If you had issues with the liquidity before, then I'm guessing, Dan, you're not down with a little levered 2X uranium ETF, Dan.
No, no, I think I'd pass on that personally, but there may be an opportunity for somebody. I'm just not that person.
And then, of course, if you want to go straight to the stocks themselves, there's a variety out there. Uranium Energy Corp, UEC. Denison Mining does a lot of uranium mining out there, ticker symbol DNN. And then, of course, the most popular one, a lot of our pro members are trading it. Some of them we're talking about just today, selling the 42 puts. Wow, those are, if you're sweating those, they're pretty far out of the money. This is Cameco, ticker symbol CCJ. Trading right around 71.5 bucks right now. This one's been moving quite a bit. Year to date, it's up about 37%, so it's had a good little run. And of course, from its nadir on April 8th, it's pretty much doubled. It was 36 bucks, now nearly 72. So a good run from that low. So there are some stocks out there. Again, Dan, unfortunately, we're a futures-oriented show. Just not a lot of futures, at least here in the U.S., Dan, that we could recommend folks check out.
Yeah, Mark, I don't. I mean, it's a great question. I like the question, and I like the idea of thinking about it. You would think this would be a segment of the market that would have some legs. Just so far on the future side, we don't see it, and part of it is we don't see that industry participation. You know, when you have some markets and an industry is used to doing things a certain way. And a part of that could be they'd say, look, I mine this stuff and I'm willing to take the risk of price movement. That is a thought process that many industries have. And if you don't have them recognizing the fact that futures, the reason it exists is for risk management. I mean, we look at it from a speculating tool. A lot of the companies I deal with around the world, they're using it for risk management. There was a company in Peru I saw a month or two ago, and they trade thousands of contracts on the CME. They don't take delivery. It's all for risk management. And right now, we're not seeing that attitude in this product. That's my feeling, and I could be totally wrong on that. But from my experience, unless you got the institutional understanding and interest to hedge, to use it as a risk product. You know, if you think about the CFTC, the regulator that approves futures contracts, one of the things they look at is there a cash market? Is there volatility in that cash market? Is there a reason for a futures contract to exist to hedge that so that someone can protect themselves? So if they're looking to buy uranium and uranium prices are cheap, they could buy futures to gather some of that exposure. That idea. And fortunately, we're just not seeing it here. I don't want to take away from the ETFs. I'm not sure about the liquidity in them. And, you know, when you don't have liquidity, you can have volatility beyond what your expectations are. I like volatility in general. But if you buy it at 10, and because of the volatility and the spread between the bid and offer, the next price is going to be 20 when you wanted 11. It's not a good thing, I think. It's more risk than it becomes attractive for me.
Well, Dan, lest us leave out our crypto and blockchain friends, there is a way you can play uranium on the blockchain as well. Uranium.io launched last December. This is a way to trade that same contract we were talking about with CME, that U308, the yellow cake, but on the Tezos blockchain. So it's a digital token, Dan. So There you go. Who was that original question, actually? It was Kamaru. Unfortunately, you are correct. The CME contract doesn't seem to really be lighting the world on fire. It hasn't been officially delisted, so something could always happen, and this thing could roar back to life. But right now, if you are in the U.S. and you're looking to get into uranium, sounds like these other products are going to be your best bet. Just again, bear in mind everything Dan was putting down there about liquidity and the market depth and the end users there, because all of these are going to vary in terms of their liquidity, and that's obviously the big question at the end of the day. All right, Dan, we went on a wild journey on the futures rundown today. Ended up in uranium, sir. What a wild journey. Did you have fun?
Yeah, I did. Uranium. I didn't expect to finish with that one.
You bet you didn't expect to be talking uranium today, sir.
No, that's really interesting.
Just say it. Just say you're giving the big adios to uranium. Just say it.
I would give the big adios to uranium.
Oh, there we go.
I think you're right on target.
We got one, listeners. I wasn't really organic. I kind of forced it out of them, but I'm going to count it nonetheless. So if you're playing at home, take a drink.
I feel that way, so that's a pretty accurate, I think, statement.
So, Dan, if folks have more questions like this, they want to reach out to you with more questions about esoteric illiquid products, or perhaps they want to check out some of your videos, where should they go? What should they do?
Well, they could mosey on over to dangramza.com. And on that website, I look at 22 different markets every day. There's a free video, and I extract some of those 22 markets to look at that free video. And that's, a few minutes, 2 to 3 minutes. And you can also get an email. If you sign up for that, you get an email to just let you know when it's uploaded. That's all that does. And that's a choice you have there. There's a course that you can take, talks about the techniques and the management strategies that I use. And there's also a more advanced video where we look at each one of those 22 markets. And what you'll see in the free and the advanced are red and green lines, which represent buy and sell levels. Those change over time as the markets move. These are not buy and sell recommendations, but ideas that I want to share that I hope give some insight into these markets and how they trade and the magnitude of change when you see a market giving us a move with the loss or profit. So those are a couple things. And if you've never traded futures, a place to begin is what you're doing right now with Mark, to check them out. Follow them. The website that I have, it's a way to look at these markets and say, are they as crazy as I think they are? Or, is there something of interest to you? And there just may be.
Check them out. I'm going to go out on a limb, Dan, and say there will definitely be something of interest to you. Check them out. Dan Gramza, GRAMZA.com, the place to go to kick the tires and light the fires. That's going to do it for us on the network today. Back again tomorrow with our doubleheader of the option block as well as This Week in Futures Options. If you're checking out the Futures Rundown, got to be listening to This Week in Futures Options. And we're back again next week, another episode of the Futures Rundown. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options. stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.